welcome to Trailblazers. Today I'm here with Erbil, co-founder of Huma Finance. Erbil, can you kind of start off by telling us kind of what Huma Finance is and give us a little overview of what you guys are doing there?
First of all, thank you, Jack, for having us today. Huma Finance is the first PayFi network. We accelerate global payments by providing stablecoin liquidity anywhere, anytime. We mainly work with large financial institutions, payment institutions within the cross-border payment, remittance, card settlement domains, and help them basically move large chunks of money around the globe very efficiently 24/7.
All right, very cool. So traditionally, like people in crypto, their sources of yield are either come from like lending, perp rates. So can you kind of break down like what PayFi is specifically and like who's kind of paying the yield on these stable coins?
Totally. So PayFi, if you open it up as payment finance, uh, this kind of happens today in the traditional finance where banks bring a lot of liquidity in. Like this liquidity comes from you and me. We open deposit accounts in banks and then we put money into the banks, and banks take that money, give us nothing back, but they use this money for liquidity, for Swift, for investments, for anything that the bank might need liquidity for credit operations, and they make a lot of money from this, right? They make money from this Swift transactions, the credit transactions. They make money from asset investments, but they give nothing back to us as liquidity providers. So PayFi provides very similar services to payment institutions, financial institutions, and it charges 6 to 10 basis points for access to liquidity, USDC liquidity or other stablecoin liquidity. But all of that money charged, majority flows back on chain as yield to liquidity providers, and these liquidity providers can be institutions putting capital, stablecoin capital in, or it can be DeFi participants who are putting the capital in, and that's how it's able to provide double-digit yield, because it just replicates a business model that exists today in TradFi, but changes the game by passing that revenue through the LP tokens that we have, mainly PayFi strategy token, to the LP providers.
Okay. And so what are some of like the specific like types of services you guys are working with today within that broader PayFi?
Yeah, I think that I would say today about maybe even 90% is companies similar to Western Union. So these companies, get a lot of money coming in, let's say in the US, somebody needs to, send money to Mexico. And then they need to keep a lot of accounts, right? In Mexico, not just in Mexico, everywhere around the world, tens of thousands of bank accounts. But let's say just for Mexico, they need to keep a lot of accounts, and they need to always keep these accounts pre-funded. It's called pre-funding. Pre-funded with whatever the volume they're expecting, for the next few days. They need to keep doing this operation, find money to pre-fund these accounts, and then as soon as the money comes in, they need to start unlocking this capital to the distribution partners wherever they have branches or some other distribution partners. And this happens for every single remittance company, and they all have to operate within this giant pre-funding network. And a lot of times, two things happens: is either you are out of the network because you just cannot find liquidity, enough, or sometimes it's a terrible user experience. People, just walk into the branch. This really happens, quite often. You walk into the branch, they tell like, sorry, we don't have money, or we don't have dollars. Especially if you're sending dollars, this is more of a problem. If you're sending fiat, things are slightly easier, but even then it happens. And they say like, we don't have liquidity, we don't have money, come back tomorrow. And this is a $4 trillion operation across the remittance industry that happens all the time. With solutions like PayFi and what we provide, all they have to do is whenever the money comes in, right, from the US, let's say $1 million needs to go to settle in Mexico, they press a button, $1 million of USDC settles with the distribution wallets in Mexico and becomes available for distribution immediately. And the partner can, either distribute capital as USD off ramping or, distribute as fiat. So that's kind of like a giant portion of the PayFi operation, and a fast growing, use case is on the card side. So we work with, for example, Raincard, which is one of the largest Visa-powered platforms for stablecoin-backed cards. So when you have a stablecoin backed card, the problem is people think their stablecoins are being used to settle on the Visa network, but because no merchant accepts, USDC or stablecoins, you have to settle on the Visa network with, with fiat, and it requires a liquidity to, map to the amount of transactions happening on the Visa network. So today, Huma powers Raincard platform. Whenever Raincard, is doing transactions on the Visa, Huma is able to provide liquidity to settle on the Visa network so merchants can get paid. We're also working with merchant acquirers to enable them to settle instantly in USDC whenever the merchants get paid. So if the merchant might be only accepting fiat, their acquiring bank can accept stable coins and USDC and make those capital available in the merchant account immediately. That's a growing use case that we see actually going to probably become easily a few $100 billion of a use case next year.
Okay, very cool. And what was kind of like, how did you kind of see that this type of yield kind of needed to be like tokenized, and like what was the initial insights there that kind of led you to kind of building out?
Great question. I mean, our previous company, we were building, myself and my co-founder at Huma, we were building Earnin. We're all based in Silicon Valley, and we spent a good chunk of our lives, now 18 years for me, in Silicon Valley. We built technology solutions in various domains, including fintech. And our previous company, Earnin, is one of the large consumer fintechs. We were building this payment financing use cases for people who are living paycheck to paycheck. And it's actually a good chunk of the US, about 40% of the population lives paycheck to paycheck, unfortunately. And we are providing an AI-based prediction in terms of exactly how much money they are making right now, and giving them instant access to their earnings immediately. And as we were building that, we realized like this concept, exists not just for people living paycheck to paycheck. A lot of businesses are tight in cash flow. They are invoice to invoice, right? Like they really are very tight. And as we are digging into this in terms of how can we provide a global service, a global infrastructure that can power more of these payment finance use cases, we start talking to fintechs and financial institutions. We realized one of the biggest gaps was in this payment financing domain, especially in the cross-border payments domain. It is trade finance, either is remittance or card settlements. It's a very, very major pain point for all these institutions involved, and we saw that we can actually solve this with stable coins. It also helped that at the time Jeremy Allaire, Circle CEO, made me an offer to become the chief product officer for Circle, and he really got me so much into this like stable coin dream that he had back in those days. And I realized, okay, if stable coins are going to be a thing, this is the building block that we should use to provide the payment finance solution and infrastructure for all these institutions. And none of these institutions have anybody who understands stable coins or crypto inside those companies. The capabilities to build technological infrastructure is very limited, and the vaults are very hard to operate. So we decided to build these enterprise solutions. After launching in 2023, we just looked at the growth and while the growth was happening and kept building into that.
Okay, very interesting. And you touched on it a little bit earlier, but you were saying like this is a really large market. So like, where do you see like right now, you're earning like pretty good double digits rates holding like a Huma token. Like, at how much deposits does those rates go to, like rates that are not like below maybe the 4.5% or something like that? Like, how big is this market to absorb this crypto cap?
Yeah, today we care so much about the sustainability of the market, especially the market we are creating on chain, because this market exists, off chain and TradFi. As I mentioned, the pre-funding market for remittance is $4 trillion today. This is McKinsey's, estimation. The credit card settlement market is $16 trillion, right, between Visa and MasterCard and WorldPay and Amex. The cross-border components of this are growing. About 1/3 of the Visa network volume is actually cross-border volume, and these are actually growing segments of that market. And then when we look at trade finance, we just have insights today that just between Amazon and Asia suppliers, there's a $1 trillion a year market, and we're working with one of the largest payments processors of Amazon to help them utilize the PayFi network to settle between Amazon and the suppliers in Asia. So that by itself is a $1 trillion market, just between Amazon and the suppliers. And then we also know that across Asia, most of the supply chain is looking forward to transitioning to stable coins and blockchain infrastructure because trade finance is much more efficient, through those. And again, it's hard to pinpoint exactly like the size of the market, but what we're trying to do is we're trying to bring the components of this market on chain in a very sustainable way. What it means is we're trying to balance supply and demand. We have way more demand on chain today. If we wanted to, raise more USDC on chain and issue more LP tokens, we could go to 1 billion, 2 billion, 3 billion easily, right? Every day we open up capacity on our platform, we get like $10-15 million in immediately. So, you can think about how it can quickly scale, to billions of dollars. But we're bringing components of this market that are sticky and going to stick on chain so that we have supply and demand growing nicely. So the rates are sustainable, to your point, because we don't want to go and compete with stupid, T-bill rates. We want to create something as, strong from an asset perspective and risk perspective, but can provide, top line real yield, as we call it, because that yield is coming from the fees. So today we're at about, over $100 million of assets, more than $5.3 billion of transactions, and we're going to be at 10 billion a year transaction by end of this year. That can easily 5x without any, change, let's say substantial change to the yield performance. And our goal is to create more types of asset categories, so platformatize the platform, the capabilities that we have, so that we can have different flavors of different PayFi assets or similar assets that people can come into, instead of all of them, being provided as just like one type of asset.
Okay, so you're saying that when you add these new types of yield sources, rather than creating like one combined pool of risk, you're actually thinking about creating new tokens that have different risks and rewards.
Totally. So we have like a $10 billion asset partner today that we're going to launch probably sometime in September, and they want to utilize the same framework, but the asset is very different, and it's a $10 billion assets, source, and their yield reward structure is different. So we're creating the kind of classic MAXI versions of their assets, and that will be a different risk reward, right? Kind of asset, and we're going to be providing and branding it separately. And then anything that fits into the current risk reward is going to continue to accumulate under the PST, the PayFi treasury token. And there will be other, partners that we know that we have about maybe 5-6 in the pipeline today who wants to utilize the same kind of framework to bring their assets, and they might be different. And these are like big TradFi partners, and sometimes they don't want to blend with others, right? They want to kind of like have something that's represents their assets, and it's actually easier for us because then economics are very clear in terms of what's being shared with them, and the assets and who deals with the assets. Responsibility and liability is very clear as well.
Okay, yeah, that totally makes sense. And it offers customers more choices on what to hold.
Exactly.
So I kind of wanted to dig into the token structure of PST that you guys started with, MPST and PST. I thought it was pretty interesting kind of mechanism, and it seemed to be pretty successful. Can you kind of talk about why you guys chose to kind of break the assets up like that to start, and or I guess
definitely
overall?
So we actually first had a institutional platform. So Huma Institutional launched first, and we only offered these LP pools to accredited investors and institutions, and we had a lot of interest. But at the same time, we realized so many DGens and DeFi users are just like trying to find their way into these institutional pools as well. And a lot of people, got accreditation just to be able to get into those pools. And we said, okay, if there's so much demand, from DeFi and DGens to get into this, maybe we should build a DeFi version of this that's permissionless instead of being fully institutional and permissioned. And as we were doing that, we actually started with the same product, which was the classic, just the PST LP, yield-bearing LP token. But then when we started, experimenting early on with the DGen community that was building up. They told us like, guys, that's great, but you know why we're here? We're like long in Huma, we're long in on this platform and where it can go. Can you create a version of it that we can just ape? And it was actually first called the ape, version. But to be honest, I didn't like the term ape as much. So we came up with a new name called MAXI, and that was literally we thought, okay, we're gonna do this for a small group of DGens, and it's gonna be like maybe 5% of our traffic. But no, like when we launched, 70% of the demand was on Maxi. You're like, holy shit, like we didn't expect this to happen. And today it's about 60-40. So 60% Maxi, 40% classic. We believe it's going to be like somewhere, 50-50 eventually. We were happily surprised. And then when I mentioned this, like partners who see this, like a $10 billion asset partner who sees it, they're like, holy shit, can you guys do the same thing for us? We want to bring our assets to Solana. Can you help us with, a classic Maxi structure so we can, push these assets in the same way that you guys do? So yeah, but start as like a, small group of DGens, hardcore. We thought it's just going to be a small feature for them. Became one of the most used, versions of the platform. So I'm quite happy about that.
Yeah, when I was looking into the data, that really surprised me. And I was like, well, that's really neat. Because then are you guys offering the incentives that like would have gone to the MPST holders to the PST holders? Is that how it kind of works there?
Yeah, it's kind of like the math is very simple. It tracks the performance of the token and performance of PST to match to similar performance. But obviously, because people are getting that in Huma tokens, there's a speculative value, right? The PST doesn't necessarily have that speculative value, but the MPST has that. And then if people believe in the upside, they can get more. And um, that's kind of how it happens. And I think we're going to start making those numbers more clear in terms of like how it really maps to what kind of an APY. We just need for the markets to stabilize a bit more because Huma token hasn't been around for that long. We don't want to just like put some numbers that are misleading. But seems like it's quite stabilized right now. It's and it kind of like found its range, let's say, and I think we feel comfortable to start putting more of the APY numbers accordingly.
Okay, yeah, very cool. So you guys have managed to like scale up a stable coin to like over 100 million, launch a token, run a points farm. Like in all of this experience, like what lessons have you kind of learned while doing all this stuff?
The biggest lesson is, a lot of our assumptions don't like early assumptions don't seem to hold when the markets are going to kind of like these crazy shifts, right? When we launched, Huma at the beginning, like Luna was the case, and it crashed really hard, and people were like, okay, like just guys give up, just go do something in AI, go do something else. We're like, okay, like we still believe in this, our assumptions might not hold, but we're gonna keep cranking because there is a more sustainable use case that we can bring this transactional economies on chain and it can be more healthy. And there are things you can't do in TradFi that you can do in DeFi. There are things you can't do with fiat, you can do with stablecoin. So we really believed in that. And that's the thing. The biggest learning is just like, even if sometimes, you completely off charts in terms of assumptions, your deep insights in your gut, if you really believe you found something, even if the market tells you something else, crypto adapts really well to things that works. And it's like super skeptical until something works as well. And just like, trusting that and going with that as long as you believe you have found the product market fit. You're going to create some of the biggest use cases in, I think, crypto that way. And also, um, because the market shifts so much, and I think that the degen and the DeFi mentality shifts so much, just being in touch with your community is extremely important. I haven't spent much time, to be honest, on social networks, and before I was building Huma, and even before we launched the DeFi platform, like I wasn't spending much time, to be honest. Now I spend like maybe 2-3 hours a day, just like talking about things and discussing things publicly, and that really like teaches me and our whole team a lot in terms of like how the market is thinking, how people are thinking, and where they want to see things grow. And we like stopped building like internal roadmaps, and we just like listen to the market, listen to our community, and whatever they want, like we just keep building. That's like an easier way to operate, at least. It seems like, instead of just making a bunch of assumptions and making big plans, just like iterate, in smaller chunks, but listen to the market at all times.
Yeah, and with a market that moves so fast, you make plans, and then 6 months later, it's like,
That's right.
what's even going on?
That's right.
So talking about like kind of your thoughts for growth, you touched on this a bit before. So are you guys kind of, when you're thinking about kind of growing the number of people holding your stablecoins, your real goal right now is to find more sustainable kind of yields, and then as those sustainable yields come in, growing the on-chain market caps? If you could expand, that'd be
That's
awesome.
right. Yeah. So it's really, we believe strongly that more and more institutions and treasuries and savings products are going to adopt the DeFi stablecoin yield strategies. And it's a no-brainer, especially if you think about the powerful engines and legos of DeFi. In DeFi, we have something called looping that utilizes a very DeFi, idea, that's flash loans, or sometimes it doesn't have to depend on flash loans, and sometimes it can depend on, actually build out lend and borrow markets with collateralized, tokens. But that looping can enable the right stablecoin yield sources to generate so much more yield than any other opportunity in TradFi, unless you like a PE investor LP that's like consistently performing at 30% above rate. Like, there's nothing in TradFi that's left out that can provide sustainable double-digit yield. But the product that we're bringing, on chain, especially when you think about built-in vaults with looping capabilities and other things, you can actually do that very consistently. Even a maybe 7-8% basis point product can easily generate 16-17 point when it's actually looped efficiently. And if the collateral is relatively stable and secure, like it similar to a T-bill, with a few basis points of a premium on top of that, and if you can have a relatively high collateralization ratio, high LTV, and a relatively low borrowing cost, it actually becomes no-brainer to loop these products. That's why we believe there's a large source of products that actually fits the bill here. And we're focused on making sure we bring in the ones with the highest liquidity, because we're tying in also the redemption mechanisms from TradFi to DeFi. Want to make sure that any asset that we bring on board is as liquid as a T-bill product, is as liquid as any other PayFi asset or PayFi product that we can find on chain, or any high leverage or highly traded product that you can find in TradFi. If you can do that, if you can bring high liquid assets, then you can have real-time NAV built on top of them 24/7. You can have real-time redemption engines, and you can tie them into DeFi in a way that hasn't necessarily happened before, but it's very performative and very interesting from an institutional perspective. Like, we have institutions who want to put so much capital into the platform that we had to say no today, but I think very soon, those products will enable them to come in big time and write big checks.
Okay, so what you're saying basically is that once you have those good sources of yield, people can just like lever them up and fill that demand like almost instantly if it's really a superior form of yield.
Exactly. Yeah.
Okay, yeah, that makes a lot of sense. Kind of looking into kind of what you see, like what kind of, I guess, insights that you might have on what's kind of going on the ground that somebody who's kind of investing or a little bit farther away from the action might not really understand about maybe stablecoins or Solana or kind of anything like that.
So I'm flying to DC in about 2-3 hours. And there is a signing ceremony happening for Genius Act. As you know, this is Crypto Week in Washington, D.C., and White House invited us, as we were very active working on the stablecoin related efforts. We were participating in the SEC's roundtables as well. I think people who are not in that circle, or who hasn't been exposed to what's really going on at DC, do not understand the scale of what this enables. There are a lot of major institutions who have never touched anything on chain. They're all going to come on chain. They're all going to start utilizing stable coins. They're all going to start, plugging into L1s or start issuing their own stable coins, start building some cross paths between their blockchains. Like JP Morgan just started integrating their enterprise blockchain with public blockchains, and they just tested a few transactions that are omni-channel or cross-chain between their enterprise chains and public chains as well. So this is going to, I think, create a new inflow of stablecoins across the board. It's going to bring a shit ton of assets on chain that people hasn't really experienced before, and it's going to bring a lot of traffic as well. Also, it's going to expose a lot more TradFi users and TradFi distribution channels to the assets that are purely on chain. So it's going to, I think, benefit both ways, and we're just going to see growth on both ends, because what happens is TradFi still has a lot of the customers and the demand and institutions plugged in. So a lot of the liquidity is there. As you start seeing assets making their way over there, just like the ETFs effect is going to happen to other assets on chain as well. Same thing is going to happen other way around. People who don't have access to the traditional institutions for geographical reasons or some other reasons are going to start trading those assets on chain as well. So that dynamic is going to, I think, help us mature the on-chain markets. Like today, AMMs we have on-chain are incapable of trading, proper assets, right? You can't do a proper IPO. I mean, I guess what happened with the pump token was a mini IPO in some ways, but if you really want to do a proper IPO, the layers aren't necessarily built. There are some centralized elements that prohibit you from providing a great IPO experience. So Solana is working on some of those with their updates to the network, and we're seeing more like custom L1s coming, on chain, online, that are providing these solutions as well. And then same thing, I think AMMs are changing, and the market making technologies and toolkits are changing. Especially Solana is leading the way. You will see like what happened with Meteora. Now there are other teams that are building really advanced market making capabilities on chain as well. I think this is just going to create a very different type of market, and it's going to go from everything's about meme coins to something quite different.
So you see like this bill coming up as like really like the start of the collision of like TradFi and like on chain, basically.
Totally, because you would be daring so much touching anything without a bill like this, because you would be sitting and looking at the regulatory environment and say, if I touch something right now, like I have no idea what the consequences are going to be down the line, right? This was the fear that all the financial institutions in the West have faced, and they didn't even want to talk about it. Like we have actual financial institutions using our product, and they tell us, please, 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 do not tell anybody, do not do any marketing, do not mention our name, because they're just fearful. But once we have the framework, once we have the regulations, then they can go to the regulator and say, here's how we plan to use this thing. And the regulator can say, okay, it fits the bill, go ahead and use it. Now they can talk about it. Now they can actually go ahead and deploy large amounts of their capital into it.
Yeah. I mean, that's going to be huge. It's probably only understated by what you're just talking about, the like kind of changes it's going to have.
That's right.
Switching the topic a little bit over to you, how did you initially get involved in crypto, and like what was the moment where you decided crypto is something like I want to be doing full time?
Maybe three instances. The first one was with Miao, the co-founder of Jupiter. He's a good friend of mine, and we used to hang out back in the days in the Bay Area. When he visited from Singapore, he would sometimes stay with me. And he wanted to do the first Bitcoin meetup I was working at Facebook at the time. I was in charge of getting Facebook to 1 billion users, emerging market growth, mobile growth. And he said, let's do a Bitcoin meetup at Facebook. I really believe this is big. And he brought in Joseph Poon, who was one of the top Bitcoin researchers at the time, the guy who built the Lightning Network. So he brought in Joseph Poon with like a Bitcoin meetup. Only 6 people showed up, 5 people showed up, 5 people showed up. It was very small, but it really got me into this whole thing. And as I kind of like spend more time thinking and talking about this with those guys, I realized like there's something here, and I started kind of experimenting with Bitcoin on my like free time, let's say. And then the next year, again, out of luck, I was a mentor at the Peter Thiel's Thiel Fellowship Program. and a kid shows up called Vitalik. He comes in pitching really hard, like this thing called Ethereum. He calls it like the JavaScript for money, whatever. Like he's like all these amazing, ways to think about it. And it's like this guy is full of wisdom, full of vision. And it's like very hard not to be like influenced by that. And it kind of got me more into like, okay, like there's something that's more serious. At the time I thought like, okay, scalability is going to be a problem because at Facebook, everything is about scalability and like, how do you build stuff billion people use? And Ethereum felt like it's this niche infrastructure. But it was like so fascinating to be around these guys as they were building Ethereum. And I started kind of like my journey, just like coding, stuff and getting into some of the tranches, over the weekends. And up until I met Jeremy Allaire, the co-founder and CEO of Circle, I wasn't going to go all in, to be honest, into this. And my experience at Earnin and meeting Jeremy Allaire and like him really convincing me that stablecoins, are going to change this whole infrastructure and change the whole game for how global trade happens. That's when I decided, okay, this is the time we go all in, and that was like mid 2022. My co-founders joined me in that journey, and we just said, okay, nothing else. We're just going to do this 24/7 from now on.
It seems like you were in the right place at the right time with a lot of these. It would take a lot less convincing for many people.
I would say it's pure luck, just being in the right place. I had no clue if I would be here if I didn't meet these people, in those occasions where I was like really looking to change my mind about things and learn new things, and those things happen to be Bitcoin, Ethereum, and stablecoins.
Yeah. Okay, so looking forward a little bit, what things, besides specifically what you're working on in PayFi and stablecoins, what things in like the crypto industry like really have you excited? You talked about the bill a bit, maybe that or maybe something else?
So I was in Korea about a month ago, just working with some of the new partners. We're gonna launch some new partnerships when I go back for Korea Blockchain Week later this year. But just building the ground for some of those. And the first thing that struck me was it was election day, election week, then 3 days before elections, and on TV, both candidates were talking about stablecoins. And literally, when one of those candidates, the Democrat candidates, got elected, I think after the first week, the first thing he did was to copy the Genius Act and the Stablecoin Act and pass a version of it to the legislation body in Korea. So I think we're going to see this, and I'm seeing this happening because we have presence in Asia, we have presence in Hong Kong. We're very close to what's happening in Hong Kong with the offshore Chinese yuan, and how China and the broader Chinese, economy and the Chinese suppliers think about the utilization of stable coins and capturing more of that market. We're very close to the UAE ecosystem. We have we have team in Dubai as well. What's happening there is very encouraging. Same thing with, I think, Saudis are now getting into the game. We're going to see more and more of these institutions and regulators just like fast follow what's happening with Genius Act. I think that's going to be the first thing. I'm super excited because it opens up the whole market, like the whole world, right, as like a digital market for everybody. I think it's great for economies that are feeding in from this international trade, but also great for builders, serious builders in our ecosystem. And number two, I would say we are going to see the serious players in the crypto market. In the past, like you could be a not very serious player and then still have like this token game, what people might call it, as like only frontier and be okay with that. I think we are seeing a huge shift from this pure retail, what I will call this casino mindset, to a more institutional mindset that people are looking for fundamentals. People are looking for serious product market fit, and I think it's going to be very hard for those token, let's say, gamers and casino leaders to demand the same kind of premiums they had in the past. I think they'll be wiped out of the market, and what's going to be replaced is the teams that are acting like almost public companies. You're going to see quarterly releases, like token holder updates and releases that are written very, very well. You're going to see more analysts actually digging further into it and writing analysis similar and akin to what's happening in the TradFi. So I think a lot of seriousness is coming, and I think that's a good thing for serious builders. Building serious businesses on chain. And a lot of the customer game, I think, is going to be pushed further and further into the trenches. And it's going to have, I think, a limited game on its own. It's going to continue to happen because casino is something that existed for a long time, and this is this is our version of the casino. But I'm excited about the seriousness being imposed into the ecosystem, and I think the big players are just going to become so much bigger, and there's going to be a shift in terms of everybody's like breaking through the glass ceilings one by one.
Well, that's a really exciting way to end things. Thank you for taking your time to come on and share what you're working on.
Thank you, Jack, for having us.